Hello, my name is Jessica. I have a helper today. She is desperate to have somebody pay attention to her, and so she has climbed onto my shoulder where she likes to move her bottom into my face. I love her dearly. Anyways, is there anything to report? Well, there is definitely, let's see. To just talk about taxes for a moment, and so I did put a link in the comments for if you need to know the super basics of taxes. If you're gonna buy crypto and you're gonna be one of those responsible citizens who reports their taxes, you know who you are. But if you're going to do that, you need to know when to report. And there's basically two things you need to report. There's basically income and there's capital gains, and which, if you think about it, is really simple. Where crypto taxes get complicated is when people do things like moving things around from place to place, or like just getting involved in protocols, sending money to a protocol that might pay out some income. Is it really income or is it return of capital and all that sort of thing? So that's what we help our clients figure out, is how to make sure that your transactions are telling the right story. So it's not just like when crypto arrives in your wallet and a crypto tax software doesn't know where it came from, it assigns that if you sell it. It then claims that that crypto had zero cost basis, which means it's 100% capital gains. And I don't know about you, but if I'm moving a Bitcoin from one wallet to another and my crypto tax, and then I sell it, and my crypto tax software thinks that that is 100% gains, but I paid something to get that Bitcoin, yeah, I'm not going to be very happy. So this is what we do. And I told this story the other night also, that we had one client who was trying to do the whole privacy thing. Like, if you split up your stuff and move it around, it's harder to track where it went and that it's yours, kind of thing. Except when he went to report his taxes, we do want to trace where it went, because we want to make sure that we have the story right, that this Bitcoin started over here and it moved around like this, but then it arrived over here before it was sold. And when he came to us, his story said there's Bitcoin leaving here and there's Bitcoin arriving over here and then getting sold, which is a big tax bill, as opposed to when it's just moving, which is not taxable. It's just movement. So, and it's not even a taxable event that you report on your taxes. You don't tell the IRS or whoever every single time you move from one wallet to another. You just tell them when you sell things. And when you sell things, you want to make sure that you know you have records that say, this coin that I'm selling is the coin that I bought over there for so much. And that's really what it boils down to, is making sure that that story doesn't get lost, and that making sure that if you're getting payouts from a protocol, we have so many people who put money into something that then breaks or rugs or disappears with their money. And you really want to make sure that if you just let the tax software treat it as it would automatically, that those funds come into your wallet and it's like they think it's income. And so they label it income. But how can it be income when you put money into it first and you haven't gotten your money back? So we help create transactions for a lot of our clients who are involved with various things that are paying out little bits of stuff. For instance, I have an NFT that pays me a little bit of Bitcoin some months from a Bitcoin miner. And the thing is, I paid for that. So that would ordinarily be income. Yes, if you're running a miner and you receive some Bitcoin from that miner, that's income. But when you're running it as a miner in your own business, you offset that income that you receive with the expense of, you had to purchase the electricity, you had to purchase the miner, you had to purchase whatever else, other equipment and things like that. So you don't really start reporting income, net income, until you've had your costs recouped. And it's the same thing, I feel like, when you send money to purchase a miner, an NFT miner, and then they're paying you little payouts. We create those transactions so that it reflects as a trade of the original funds that were sent into the project for the Bitcoin on the day that we received the Bitcoin, so that it's a return of our capital and not income. And it will end up being reported on our taxes, but instead of being on the income line, it will be on the capital gains line, because that USD or USDT or whatever funds we sent in to purchase that miner, we create a wallet where it's sitting, and then we create a trade, $1 of USDT for $1 of Bitcoin. And in that way, it shows up on our capital gains, but it's not a taxable, it's not creating tax for us. And this is a myth that some people believe, actually, because they say, oh my gosh, they don't realize that every single transaction that changes from one coin to another needs to be reported. So if you have a USDC, you have $500 USDC, and you trade it for $500 USDT. They're worth the same thing, but you do have to report the taxes. And it's not that it's going to show a gain every time you do that, or a loss. You're not going to be paying like some percentage of that $500 because it's a taxable transaction. That's not the way it works. The way it works is you have a cost basis for that $500, which was $500, and then you sell it for $500. So you have a net gain of $0. This gets reported on your taxes, but it doesn't actually create more taxes for you to pay. So some people worry about double taxation. They're like, well, if I'm moving funds from here to there, and but I have to move it through 4 times, 4 different coins, then I'm getting taxed 4 times. And it's like, no, you're not getting taxed 4 times, because those 4 times you're switching from coin to coin, they're all worth the same amount, unless they're not. But usually they are worth the same amount. And so you're reporting the transaction that you changed from 1 to 2 and 2 to 3 and 3 to 4. But since they're all worth the same, there is no net gain or loss. So you're not actually paying taxes on it. So thought I could clear that little myth up. I have escaped. But yeah, back to crypto taxes. So if you need to report crypto taxes, you don't have to be scared that you're going to pay a lot just because you've been moving things around. When you're moving things around, you're either not reporting that at all, because if you're taking one coin and you're moving it around, that's not a reportable event at all. The only part that would be reportable is the amount you pay in gas fees. So if you pay $5 of gas fees to move a coin from here to there, and that $5 is, that part actually isn't deductible. So in some countries, you can deduct that as an expense. But the $5, the part that Americans at least would report is that if you bought that $5 of gas token for $2, then you would report that you bought it for $2, you sold it for $5 to pay your gas fee, and so that's a capital gains of $3, and then you would pay some portion of that as your taxes. So to be clear, you do not pay the entire amount you gained yet. No country taxes 100% yet, so that's good. And if you're changing assets and they're staying the same value, you're not going to have gains and losses. You are going to have transactions to report, but it's not double taxed, it's nothing like that. So reporting your income establishes the cost basis of those coins that were received that you didn't purchase. So anything that comes in, if you earn some mining payouts, or if you earn interest or staking rewards, or if you are paid things because you put coins into a liquidity pool, or if you get a free airdrop that ends up being worth money, all of that you report as income, which sets the cost basis. And then when you sell those assets, you report the difference between where you bought it and where you sold it, or where you received it and reported it and where you sold it. And sometimes that's a gain, and you would pay a percentage of that gain as your taxes. And then sometimes it's a loss, and losses offset your gains 1-to-1. So if you had a bad year or a bad coin, if you got into a coin, like if you bought the Trump coin when it was way high and then later it crashes and now your coin is worth much less than it was, you sell the coin, and that offsets your other capital gains. And if it's big enough, most countries let you roll forward those losses to offset future gains. So we know several of our clients who had really big losses during the bear winter that we just lived through in 2022 and 2023, where they had hundreds of thousands of dollars, a couple of them, hundreds of thousands of dollars of losses. And you think, oh my gosh. And the US government will let you count $3,000 against your regular income of losses and then roll forward the rest. So it's like, well, here's the good news. You get to count $3,000 of this against your current year income. Great. And you'll get to count $3,000 next year. Remarkably enough, the one person I'm thinking of who really had like hundreds of thousands of dollars of losses, they ended up buying Bitcoin when it was 16,000, which is what I keep saying I wish I had done. When Bitcoin was at $16,000, why was I not buying two of them? But in any case, they did buy Bitcoin at $16,000, and they've been selling it recently. And they're like, we've already used the capital gains losses deduction. Is like, wow. I mean, like, to imagine making that much money, that would be pretty awesome. In any case, if you are interested or have questions about crypto taxes, please make sure and come talk to us. I did drop a link for one of our PDF freebies that explains the basics of taxes in one page, what your responsibilities are and what you need to know. It boils down to one page. Like, I was pretty impressed that day when I was like, hey, it's this simple. It's so simple. And yet when you try to do it by yourself, you can find yourself getting yourself in a whole ton of trouble. I was helping a client this week. She's a former client. She ended up, we did her taxes for her 3 years ago, and it was very near the end of her next year. And she said, oh, I'll come back and have you do them the next year when we finish. But she didn't. She did not ask us to do it. And she ended up, I don't know if she realized this, but when she hooked up to our software to get the data access, like 2 weeks ago, it imported all of these transactions from the year that she reported, and she had big losses that year. But she actually had bigger losses because she actually didn't have the data from the last month of trades, and she'd actually realized even more losses during that month of trades. And so now we run our taxes and we say, we could see that you probably ran this report yourself where you came in and you pushed the button and you assumed it was all ready to go, but it wasn't. And you didn't check. Even though we provide the guides and the tutorials that teach you how to check, you apparently didn't check, and you have thousands of dollars of losses that were not recorded properly. And so, yeah, not cool. If you don't know what you're doing with your crypto taxes, you really should reach out to somebody who can help you. And if you want to talk about your situation, if you're not sure if you need help, I love meeting with people. So message me, book a call with me or something so that we could talk about, do you need help? Are you just starting out and you don't really have anything to report yet? I will not sell you services you do not need. Or are you someone who maybe has a lot of losses that would really benefit you now and in the future for reducing your tax bill in the future if you report them? But you can't report them if you don't know they're there, or you don't know how the software works, or you don't know how to confirm that the software is telling the right story. So reach out, come talk to me. And for now, I'm going to sign off, but get help if you have crypto and you want to be legal and you want to pay the least taxes, because it's totally worth it if it is. If it's not, I'll tell you. All right, have a great week, and we'll see you later. That's all the time we have for today, but the conversation doesn't have to end here. Connect with me on the link below for more updates and behind-the-scenes content. And of course, if you love this video, hit the subscribe button, and see you in the next one.